Welcome back to another episode. Today we will be discussing a quick overview of last week's weekly plan. We'll go over SPX, we'll go over the action that we've pretty much seen throughout the whole week, and then we will cover my top 4 stocks to watch for the next few weeks. Every week I like to come up with a weekly plan that's focused on ES and SPX, and then I like to come up with 4 opportunities to watch for on individual names that are more catered to swing entries and things like that, longer term views. And we will begin in just a second. All right, first thing I'd like to look at here is SPX. So every week I have a plan curated for SPX and ES with weekly pivot levels for upside and downside. For last week, our pivot for upside was 40.28.84, as you'll see here. This was the upside breakout that I was looking for all week. After doing some more deep diving into last weekend's analysis, I had very high conviction that we would continue seeing this rally to new highs, at least local highs. And the downside pivot that I was looking at was 39.52.63. So we'll cover briefly of what happened throughout the week and give you guys an idea of how I find additional levels for intra-week. Now, with Monday was off to a hot start. We immediately popped right off the bell and saw a test of our 40.28 level here of this weekly breakout and closed right below it. Okay, so actually let me go down to a shorter time frame here. Perfect. Now with Tuesday, we ended up gapping down, now forming a gap at 40.19.37. I marked this level, and this has become a key level for the subsequent days to come throughout the week after Tuesday. And as you can see, afternoon session was pretty much uneventful. We chopped around for most of the day, attempting to break back above this gap fill level here. Never broke back above, ended up closing below it, which led to a gap down, massive gap down on Wednesday. Okay, now key thing to know here, this purple box that I've outlined here was the target for the short side that I gave in the pre-market plan. This also coincided with the trendline support that we have here that was formed the prior week. Not only that, the third confluent data point was the 39.52.63, which was last week's pivot for downside, which you can obviously use as support. So once we saw this hit, market completely reversed into the close, seeing a 70-point move, but again, rejecting this gap fill level of 40.19.37. So this is how you find levels and utilize the levels throughout the week. Everything else is pretty straightforward towards the end of the week. We saw a gap up. We also shorted this gap up. Pretty simple, straightforward type of trade. We saw the 40.19.37 gap fill used as support now. Okay. Trading below it, it was being used as resistance. Now that we are above it, we saw a bullish retest off this level, leading to a break of our pivot and leading into new highs. Our last target for upside for the week was actually 40.97.29. We were shy of that by 3 points into Friday. All right, but everything played out essentially how it was planned out for the week. Now, for this coming week, we are looking at this 40.97.29 as your weekly upside pivot. As long as we are trading below that, this can continue to range. We are also using the 40.28.84 level as the downside pivot. Okay, so you guys can see how we flip levels as we're trading in relevance to price. With 40.28 being last week's upside pivot, it's now turned into a downside pivot for this week. Okay. We do have FOMC this week. I do expect volatility. I do expect wider ranges to be traded. So we'll have to see what happens with that. But I want to go over some of the names that we looked at for last week's watch list and see how they panned out. One of the things I want to know is, if you guys remember from a couple weeks ago, I did that CPI review on the 12th. I went over some key names that we can probably watch out for. Some of them included Amazon, for example. At the time of the video, Amazon was trading about 94, 93. And now we've seen a move to 103 over the week. Tesla. High conviction analysis that I provided. At the time of the video, we were trading about 122. I believe, mentioned that we could probably see 137, 140 relatively quickly, which is exactly what we did. Also mentioned the opportunity to take a February 17th 150 call, which at the time was trading about 350 or something like that. I just checked the premium. We just closed the week with that premium trading at 31 or 32. So you got about 900% out of that leading into this pump and post ER. Some of the names that we looked at last week were Net. For the past couple of weeks, I've been pretty bullish on the cloud sector. And the week prior to this, for, what was it, the week of the 19th or something like that, I had names such as Adobe, ZS, Crowd. All of those panned out pretty well. We played Adobe. This week, I added Net and Snow to the list in terms of the cloud sector. Reason being was because I started seeing some lagging in terms of the cloud sector versus big tech. So you'll see here, if I do CRM plus ZS plus Net plus Snow plus Crowd, I think that's pretty much it. Okay. This was the breakout that we saw. Okay. Now, if I do Amazon plus NVIDIA plus Tesla, during the time when I looked at these two, there was definitely some lagging in terms of the cloud sector. The cloud sector barely broke out. Meanwhile, big tech had already seen about 5 to 10% move off the breakout, which is why my focus became primarily on cloud tickers. So everything panned out pretty well. Snow, we saw a beautiful move and finally a breakout on Friday. Net saw a beautiful about 20% move from Monday into Friday. And then we also looked at Beyond. Beyond was another candidate that I added to the watch list last week to watch out for. I've been waiting for this type of move on Beyond with this consolidation here that we finally broke out of. Now, this squiggly line that I highlighted here is essentially the trajectory and velocity of the dump that I'm trying to depict for you guys. When we get a move like this, we are likely to see the same thing on the reversal. So once we broke out of this range, which was the 1570, I think this was based on the weekly or monthly range. Yeah, this was based on the weekly inside range here from October 24th. Once we got the breakout from there, this saw a 30% move. This was highlighted before for last week once I put it on the watch list. 30% move from 1570. Beautiful trade. Now, is the opportunity missed? For now, probably. This definitely needs time to structure out, and we can easily start building a range up here before we end up picking the direction higher or lower again. But this consolidation range here has been key. So long as we use this as new support, this has more longer term rallies, but it needs more time to structure out first. Now, every week I like to curate a plan. The weekly plan is focused on SPX and ES for more macro weekly pivots and what to expect and how you can trade those. On individual names, I like to typically use 4 opportunities per week. Now, sometimes the weekly watch list doesn't always play out the same week. And by that, sometimes the entries aren't met yet. The prices has been consolidating for a while, so there's really no opportunity yet. That doesn't mean it's not valid anymore. So you can still use these opportunities and look back at them for the following weeks. If you happen to find an entry again, or maybe a re-entry, a reload on it, you can feel free to still use it. So this week I have one, I want to look at SE. It's really important to zoom out on the charts. No matter what you do with your analysis, if you're focusing on charting in TA, you always need to zoom out to understand the bigger picture. Understand what the trend is. Understand where we're trading at in relevance to price and time. So when we take a look at SE, I was able to find this monthly inside candle that we traded from last May. Now, important thing to note here, this is from last May. So we've been trading in the same range for almost a year now. Every attempt at breaking above, we didn't break. Or we never closed above. Every attempt at breaking below, we reclaimed it with strength as well. So this range, which is from 54.06 to 90.38, this is going to be a pretty huge range for SE. But this 9038 is now going to be my upside target. However long it takes to get there, I would assume it's probably going to take a few weeks. All right. We are now going to hit right into this huge supply zone here. This area, this block is going to be your resistance essentially. So with FOMC coming up, you may be able to get an entry early in the week. You may not. I'm looking for entries anywhere within this range. All right. With a target up to 90. I love the way SC looks. I love this consolidation and bottoming structure. And when SC moves, it really moves. And it's a very lucrative type of ticker to play. Next thing I like to look at is ROKU. Same assessment with ROKU. Basically zooming out on the larger time frames, getting an idea of what you're already seeing on the chart. So the first monthly inside candle that we actually traded in is this IPO. December 2017. So you'll see here, top and bottom of the monthly range, December 7th, 2017, high and low. Okay. Now we found another monthly inside range that we've been trading in from last month, 61.34 and 38.26. Okay. What's key to note here is that we've been able to hold above the initial monthly inside range from 2017. So now what we'd like to see, if we actually zoom in here, is a break above this. Okay. Your two short-term key levels are essentially the 2017 inside range plus last month's. One more thing to note is that for the first time since we broke down from the 60 MA back in August of 2021 here, first time we've closed below, this is the first time that we've actually closed above and held consecutive days above the 60 MA. Every attempt at breaking above the 60 MA was immediately shorted and sold right back under. So this is one of the convictions that I have for ROKU as of now. I do think that ROKU can see a relatively lucrative move for about 20-30% on underlying. My target personally is about 75 plus, but the confluence is there. So long as we break above these monthly inside ranges, this can definitely provide a nice move for the next month or so. Cool. All right, what's next? I have two more. Zoom. Zoom is another great candidate in my opinion. I did the same thing with Zoom. I zoom out, find my monthly inside ranges that we've been trading in. In this case, it's October 2019, like you'll see here. October 2019, 2019. And we traded in that range back in 2019 for a few months before we finally broke out during COVID, for obvious reasons. We are now trading right back into that range. We have been for probably the last few months, and we've now formed a new monthly inside range. Actually, I could mark this one as well from last month, but I would focus primarily on this November one, being that we had been holding above this. So once we zoom in a bit, again, I think Zoom is in a great spot right now for a rally. We do have a gap fill that we haven't filled yet around 96. My targets for this minimum 78, but I'm looking towards 90 for the next month or so. I also don't think Zoom is going anywhere, honestly. Regardless of how many people are back to work physically in the office, I don't think Zoom is going anywhere. And I think, you know, they obviously have been overvalued for a very long time for obvious reasons during COVID, but I think this is a great opportunity to go along on this, in my opinion. And the last one is DraftKings. Again, same method. Same method. What I've done is zoom out, look for my monthly range, which in this case was formed during COVID, during March. So this is your monthly high and low that you'll see here, right? This is from this March candle in 2020. Okay. We also have this trendline resistance or trendline support, which is now resistance here, macro trendline that we need to get above for DraftKings in order to see much higher. We just broke out of a bull flag recently. I do love the chart. I love this consolidation. These are some of my favorite reversals to play. Technically, it looks good. And fundamentally, it's good. So to dive into fundamentals a little bit more, Massachusetts just recently got approved for sports betting. Encore, which is the casino that we have here, they are the first ones to acquire their license to provide sports betting inside the casino. So what they've done, it actually starts this weekend. What they've done is you can go into Encore, hop on the app, and do your sports betting there. It has to connect to a kiosk or some method like that in order to do so. The other platforms and mobile platforms, such like DraftKings, have not yet gotten their approval, but I believe it's slated to get approved by end of Q1. Now, if you put two and two together, Massachusetts is a very sport-heavy state. We have Bruins, Celtics, Red Sox. This is going to bring in an abundance of new sports fans that didn't have access to sports betting before, unless you had a private bookie and things like that, which exists here. But they are now able to do sports betting in mass. So you couple that with the fact that March Madness is right around the corner. This is going to generate a brand new revenue stream legally for all these sports betting platforms. So for me, I'm very bullish on DraftKings fundamentally and technically. I think DraftKings has shed enough blood for me to be bullish on this for the next few months, even for the next couple of years. I do think that personally, I would take a spot position in shares as well. Just hold it for a couple of years. Obviously, your stop loss can be about under all-time low around $10, but I think that this is good RR. The fundamentals and technicals match up personally, so I definitely do like this one. All right. And I think that's pretty much it. Those are my 4 opportunities for the week. I do these higher time frame charts on a lot of names. I think they look great for a continuation, but be cautious with FOMC. A lot of these opportunities I'm currently looking at, especially for this week, I'm looking at longer dated contracts. The reason why is because we are now in ER season. So a lot of these names have ERs coming up. To mitigate risk, I'm not going to play weeklies on these and swing into ER. My plan is to take the minimum date that I have for these opportunities is February 17th, monthlies. But I'm going as far out as March, April, May. So for example, DraftKings, I'm likely going to take 2 different dates. May for 17.5 calls. Goal is for that to be in the money by March or April. Okay, then you can roll it out and likely take like a March 16 or 17 call. So this is my strategy right now for these names. Like I said earlier, the weekly watch list that I curate doesn't have to pertain specifically for that week. It's obviously going to take time for things to play out. But if some of the things play out immediately, great. Take profit, move on to the next thing. All right. So I hope you guys have enjoyed this. I'm thinking about doing this more often. I think prepping for the week is great. I already do this on paper. So putting it into video and being able to share this content with you. If you guys do like it, please subscribe, share, and then we can definitely do more of these. But other than that, hope you guys enjoy your weekend. And thank you guys for tuning in.